Good afternoon. My name is Paul Vanas, and welcome to Real Estate Pro Talk. This is a real estate-oriented program with many topics that we're intending on covering over the next few weeks, some of which are how to buy and sell a home, how to choose a real estate agent, how to choose a mortgage broker, flipping real estate, creative financing, staging a home for sale, home inspections, private financing, how to buy a property with an IRA, the Rhode Island cesspool law, and finally, how to develop a piece of land to accommodate your dream home or sell a new home. My company has been in business, or should I say I've been in the real estate business coming up on 40 years now, and I own a real estate school and a brokerage company. So a lot of the knowledge that I'm going to try to impart on you today is based on the classes that I teach real estate brokers. So you will have the information in hand, and when you meet a broker, you'll know exactly what they're talking about, and you'll kind of impress them as well because you'll have inside technical knowledge on the business. I can be reached, of course, at 401-265-6144. That is 401-265-6144. That's my personal cell phone. You can call me day or night. And you can also email me at any time at the word optimism, OPTIMISM, at cox.net. The mission of the program today is to, of course, educate you in different facets of the real estate business. And we have a guest with us today, Bethany Levin with Northpoint Mortgage. Say hi, Bethany.
Hi, Paul. Hi, everyone.
Yeah, Bethany has been in the business a long time. I've used Bethany many times over the years. She's kind of my go-to person when everyone throws their hands up and they say they can't do it, and I call Bethany, and somehow she manages to pull it through. And of course, we're going to encourage call-ins today at 401-766-1240, 401-766-1240. If you have any technical questions for Bethany or myself, we'll be more than happy to answer those questions. So getting right to it, Bethany, tell me a little bit. Well, tell me about you. You live in North Smithfield.
Yes, I do.
You're a Northern Rhode Island gal, which is great.
Right.
Because
22 years coming up on.
Wow. So you know all of the idiosyncrasies and the things that buyers are looking for when specifically to Northern Rhode Island, because there are some differences between the towns, right?
Absolutely.
Well, how did you get into the mortgage business?
It was by circumstance. So I needed the flexibility to raise my two daughters, and the job gave it to me. And I also came from educational background in veterinary medicine, but brought that into this. And so I like to educate my clients. So usually go by mortgage consultant versus the name everybody knows is loan officer, because education throughout the process is really the biggest thing that I think is so important for the clients to know when they're purchasing or refinancing.
Well, that's great. Now, when we were speaking on the phone the other day, and you happened to mention that you started off with an interest in veterinary medicine.
Yes.
And how did you get from veterinary medicine over to mortgages? And the reason why I ask is because I started out in college in electrical engineering, and I ended up in the real estate business, which broke my parents' heart because one day they thought I should be going to work for NASA, and then I came home one day and I told my parents that I'm getting into the real estate business, and they looked at me like I just threw my career away.
Right.
But how did you go from veterinary medicine to mortgages?
Well, I wanted to go first into environmental protection law, and then I thought I'd be a veterinarian, but so instead I ended up becoming a head technician supervisor at the time, the state's largest 24-hour emergency animal hospital. And but everybody knows the love of animals and children just doesn't pay. So when time came that I needed to earn a real living to support my family, that's how I came into this. But I had ties with the family members that had the business, and they kept saying, "Oh, you'd be so good at this." And I was like, "How can I do this? I have two babies." And well, I ended up doing it, and 17 years later, here I am.
Oh, that's great. Tell me, so 17 years ago, things were very different,
Very
in
different.
the mortgage business as they are today. You were pre the boom of 2005 and 2006.
Right.
What differences do you see in acquiring a mortgage then and now?
Well, I mean, there's pros and cons to everything, but as we know, back then there were the subprime loans that people were put into. Many of them they shouldn't have been, and now I think those are basically eliminated. A couple of coming back. Some things are coming back, but I think things turned all of a sudden for the worst, where then all of a sudden it was very difficult to get a loan. So they have loosened up a lot of the restrictions, but back then it was just too easy for people, and that's what got everybody in trouble.
Wow.
Yeah.
So basically, a buyer has to qualify for a mortgage based on income and credit score and so on and so forth. One of the indicators they use, and this may seem very basic for some of our listeners, is a FICO score, Fair Isaac score.
Right.
You have a thing called desktop underwriting, whereby you get certain information
Right.
from a buyer, and then you run them through the supercomputer, and then the supercomputer tells you whether or
Yes,
not.
no, yeah, or
Okay.
maybe.
Right. So a FICO score is, I think, very important now, because it's kind of like an indicator. Most buyers that call me for brokerage reasons, they don't know what their FICO score is. And so is that something that you can help?
Absolutely. So, people don't understand that also having no credit is as bad as having bad credit. So, especially with the younger, generation starting out buying their first homes, they don't have credit. So, establishing credit is important, but the people who do have credit also don't understand that we're scored very differently now, very differently. So, you could have A+ credit, never gone late on a payment, but if you went and you maxed out your cards, your scores drop now. So that's a different way that they generate the scores, because they feel, are you getting in trouble? Are you maxing your cards up because you can't pay them? So having the credit, yes, good scores are important. Me personally, I don't think it's a great way to judge a person, because just like I said, there's, people who have never gone late on anything, and their scores could be low because they carry high balances. But the scores aren't just the only thing. You have to, having steady income is important. Preferably being at a job for 2 years, same job, or consecutively, employed for 2 years. Kids just out of college, yes, they don't have to have that consecutive income, because we know they were in college. So job offer letter, yes, you can start with that. Having assets, meaning money in the bank, and not just enough for the down payment. It's like I tell everybody, you need money to buy the house, but you need money to buy a home, to make it home. So you want to, have yourself prepared, because there's no more mom, dad, something's broken, or Mr. and Mrs. Landlord, come fix it. It's all you.
Wow.
So there's, yes, things have gotten a little easier, but still want to make sure that you are really ready to take on the largest purchase you're ever going to make.
Absolutely. And I know you've done this for me with my clients in the past. They've called you, and they've had some credit issues in the past.
Right.
Everybody has bumps down the road in life, and
Yes.
things happen. Good things, bad things happen to good people, my father used to say.
Right.
And you basically told them how to repair their credit.
Yes. So we have great tools that one will tell us. Like, I can, just by looking at someone's credit score, know exactly that, okay, like the high balances. I tell them, look, you need to pay this down to, we don't ever want to carry over a 35% balance compared to what we can charge. Okay,
I see.
Our high limit. So I can see that. Then there's other things that I'm not sure of. So we have these, it's silly name, What If Simulator, and I'll go in and put in, okay, if they paid this card down to that, if they did this, they did that. And then it would tell me what the potential score increase is.
Nice.
And it's a great little report, and I send it over to them. And I tell everybody, there are no stupid questions. I do this for a living. So just looking at your credit report, if you're not sure how to read it, we'll go over it together.
Right.
But the report tells them what they need to do, and how, the time frame on when it will increase. So
Yeah, and I remember that. I'm glad you mentioned that, because I remember my particular buyer, and you told them it's probably going to take about 6 months or so for you and to do what you had to do, and it gave them some degree of hope that I guess they wanted to purchase a home for a long time, and they got a lot of no's. I mean, it seems in life we hear more no's than yeses, and when you took over. I think 7 months later, we had them into a house, and that was just
my
great.
record is 18 months working with somebody.
Wow.
Getting them prepared and ready to purchase, Yeah, but look, I'm not going anywhere, obviously.
Yep.
My number hasn't changed in 20 years. And so I would rather work with them. And even, but it's not even the ones that need to increase their scores to qualify. It's also, if you have a good score, but you're some points off on getting into a better rate, I'm going to advise that as well. So, it's not just I need to work with you to help you and, get your scores up. It's, look, yes, you're qualified, but I'd like to see you try to get your score to this, because this is the difference in the rate. And sometimes it can be in 0.25%, in the numbers.
No, that's great. While we take a short pause, and you can give the audience your contact information, email, and phone number.
Absolutely. So my phone number is 401-465-9003. And same as Paul, it's my cell, and I am available nights and weekends, because I know not everyone can talk about their finances during the day. My website, which will also have my email and phone number on it, is www.bethanyloans.com. And my email, it's a long one, blevin@trynorthpoint.com. But again, everything's right on the website, www.bethanyloans.com. I'm on Facebook as well as LinkedIn, too. So easy to find.
How do you keep up with it?
Yeah.
Yeah, I mean, the world is so different today with social media, and
Absolutely.
and there's so many ways to contact us now, and
we can't hide.
It's almost impossible. Between the cell phone and the text messaging and Skype, and I have people that call me and says, "Well, I tried you on Yahoo Messenger," and I'm saying, "What is Yahoo Messenger? I don't even know what that is," and they're trying me on this. So, I know when we've done business in the past, you've always been there, on a Sunday afternoon, and put down whatever you're doing in the middle of and answer technical
Done a
questions.
pre-qual on Christmas Eve one year, too.
Oh, wow. Yeah, wow. That's great. Again, 401-766-1240. If you have a question for myself or Bethany Levin from Northpoint Mortgage, we're here today to try to help you. If you're buying a property, or if you're selling a property, or just want to know about mortgages in general, refinancing property, we're going to have a guest a week that specializes in different subjects pursuant to real estate, and hopefully we can enlighten you with some valuable information that you can use in your day-to-day personal business. Bethany, tell me a little bit about the current market conditions. Like right now, everyone says, what's the rates? And I know there's different interest rates for different mortgage programs. But generally, what's the interest rate right now hovering around?
Generally, they're in the threes, the high threes. But again, it's one of those... I don't have a crystal ball to tell you what your rate is, because that, obviously everyone, I get it. What's the rate? The rate is literally tailor-made for each and every scenario. And what I mean by that is, if someone has 700 high 700 scores, or just in the 700s, they're purchasing a single-family home as a primary residence, and they're putting 20% down, doing a regular conventional conforming loan, their rate is going to be better than someone who has a score lower than, let's say, 720, and they're only putting less than 20% down, and they're actually buying a condo. Okay, that person's rate is going to be different. Lending's all about risk. How are we and the property are a risk to the lenders. So the rates are different. However, the great thing about Northpoint, we are a local lender. We do have every single loan product, conventional, jumbo loans, all the FHA, VA loans, USDA loans, which are not what people think. They're not for farmland. And those are great products with the zero down, which we can get into that a little more as well. We do all the state loans as well, Rhode Island housing, which are great. Another great asset for people who don't have the 20% to put down. So there's all different loan products and for basically every residential property. And residential means single family, condo, townhouse, and up to 4 units.
Yeah, that's great, especially in the Woonsocket market, because the multifamilies, they're all over the place.
Absolutely. But anything over 4 units, they consider a commercial loan, and that's a totally different beast, and we don't do those.
Yeah, it's funny you mentioned that, because I find, when I was coming up in the 70s, my parents bought way back they bought a multifamily house, and we lived in the multifamily house for so many years, and then eventually we sold the multifamily house and we moved out to what I thought was the suburbs, Mount Pleasant and Providence. I thought that's where that was the country, but in any event, I find that people are doing that again. They're buying multifamilies. And I did it. My first house was a multi, and I wanted to have that rent coming in to help me pay my mortgage, because back then I didn't have 2 nickels to scratch together. And I think I went out and I got a Rhode Island housing loan at the time, and the interest rates were, I think, 15.95% in 1982.
Right. So my father said his was in the 20s when he purchased our home.
Yeah, and I remember going home and telling my dad that I paid $36,000 for a house, and he really wanted to beat me with a stick, because I told him I was going to have like a $400 or $500 mortgage, and he told me I was out of my mind, and what's wrong with you, and you should have consulted me first, and so on. But I said, Dad, that's all that's out there, and that's all that I could afford. See, when he, after World War II, when he was coming up and making his way through life, they went either VA, no money down, or they had the 20% down. They worked hard and they saved the money, and they went and see the banker down at the manager of the bank down the street.
But back then, you could walk into the bank and they'd say, "Oh, hi," and give you a loan just because they know you. Absolutely,
and that's the way it was. It was more of a business handshake type of thing. You had a history with the bank, and now, of course, in your world, it's so complicated now, and that's why I ask about the rates. Even juxtaposed with the rates when I was coming up at 15.95%, and yours was in the 3s. I mean, that's like phenomenal.
Amazing. And the other thing that I didn't mention about that is being, we're called a delegated warehouse lender. So yes, we lend you our money the day of closing, but on our warehouse line, we have over a dozen of the national major banks and investors' rates available to us. So I'm not just looking at one bank's or one investor's rate. So I could check on your rate at 2:00 in the afternoon. It could be good with one of our lines, and go check it back again because things improved in the market, because we get alerts all day long. They change constantly. Check in another line on our warehouse line, their rates are better. So when it comes time to locking your rate, I'm not just looking at one bank's rates. And it's amazing how they're all different. Yeah,
it's like watching the stock ticker and down in Wall Street. It's just changing constantly during the day, and that begs the question. I'm sure you have people that must ask you all the time. I'm always of the school of lock it in, lock in the rate the day of the application, pay whatever I have to extra, to lock in that rate.
Well, we don't have any rate lock fees as far as locking it in.
Wow,
we do not collect any money up front like that. But no, we don't have any rate lock fees like that.
That's great.
At all.
Yeah, because like I said, I'm of the school, I know what I have, I'm going to lock it in, and then other people, I have a lot of clients, they want to kind of roll with it because they think it's going to, and I say to them, well, it's 3.8 or 875 or something, and they'll say, how low do you really think it's going to go?
And it's amazing, like, it doesn't make much, difference. If you want to just walk around with bragging rights, basically saying you have a lower rate, well, it really doesn't change. The payment doesn't change a whole dramatic amount. Yes, obviously on the larger loans, it could make a difference from 1/10 of a point of a rate. But, if we tell you 3.875 and they're like, well, so-and-so told me 3.625, but, I have to pay this and that. Well, it's not worth it most of the time to buy it down, but it's a matter of preference, and some people just I'm not a gambler, but some people are, and I work for them, so listen to what my clients want me to do. I can only advise.
And then, of course, you get the stories where, my uncle's cousin's sister told me that
the water cooler talk,
the election, with the election coming up, rates are going to go up or come down before, depending on who gets elected and whatnot. And we've all heard these rumors over the last 20 years, and they never pan out.
No.
Yeah.
I try to advise everybody with my home buyers, especially first-time home buyers, or ones that haven't purchased in a while. And, it's like, just your best bet is not telling anybody you're buying a house, because all of a sudden, Uncle Joey, who's the baker, becomes the professional inspector, the finance guy. He knows everything, and you're going to start hearing so much information from so many people that are not the professionals, and your head's going to spin. So when you have your professionals, such as your real estate agent and such your lender, like myself, you're hiring us. Let us do our job and don't listen to anybody else.
That's a great point. Because I remember when I started in the business, it was traditional for a first-time home buyer to bring mom and dad with them on the showings. And of course, mom and dad's job was to get the price of the house down as much as they can for their child, and that's understandable.
Yeah.
That was long before buyer's brokerage and seller's brokerage, which we'll talk about in a different show. But the interesting thing is that the mom and dad would, at that time at least, talk their children out of a great opportunity. And I'll use the example of the early 80s when the rates were 15.95 and 14 and they were on their way down. But certain parents told their children, you got to be crazy to buy. And all of a sudden they waited, they hesitated, and all of a sudden it's 1986. The rate was 10% now.
Right.
However, the house that was $49.9 is now $120.
Right.
So they're either paying it back in principal, where they could have refinanced as time traveled by, and then of course with time they could have refinanced as in 2-point increments and have the house that they wanted for the lower price. But a lot of those folks, ended up paying a lot more money for a house than they really should have.
Yes.
Well, you're listening to Real Estate Pro Talk. My name is Paul Vanas, and we take call-ins if you like. The number here is 401-766-1240. I'm here today with Bethany Levin from Northpoint Mortgage. Bethany is a mortgage professional who has many years' experience, especially up in Northern Rhode Island, because she's a North Smithfield resident, and I like serving the community of this area, because I think it's sometimes it does take a village. Bethany, I have a question. Now, you mentioned a couple of different mortgage programs. FHA is a federal housing authority.
Right.
What's the function of an FHA mortgage as compared to other mortgages?
So one big misconsumer is that people think an FHA loan or a VA loan or even the USDA loan, that the government lends the money. They don't. They insure it, meaning you don't have to have 20% to put down. You could, with FHA, you could put down as little as 3.5%. And when we have less than 20% to put down, your mortgage has to be insured. Everybody knows the name as PMI, private mortgage insurance. But with the government loans, they're not. They're insured by the government. So if you default on your loan, they're not covering you. They're just going to be paying the lender certain percentage of the amount that you default on. But it's higher than the private mortgage insurance company. So the lenders used to like that because they felt safer. So their rates historically used to be lower than conventional. Now with FHA, they used to be my go-to loan. They used to be fantastic. They don't have as high of what we call debt-to-income ratio, meaning that if your income is in whatever you owe, what we call your liabilities, car loans, student loans, credit card bills, whatever's on your credit report, your monthly debt, and added to your income, and then the new mortgage, That's your ratios, your debt to income ratio. And FHA does allow a higher ratio than does conventional. They also don't have what we call hits to the rate for lower credit scores as does conventional. So your rate might be a little better, but the problem that has happened, that why I don't go to it, my go-to anymore, is unless it's the best loan product for my client, is their insurance has become very expensive.
I see.
And you're actually financing more. So they have what's called upfront MIP. It's a mortgage insurance premium that's financed into your loan amount, and that's 1.75% of your loan. You're financing that. It's added into your loan amount.
So they take the what's owed for the mortgage insurance, and they actually add it to what you're borrowing.
financing it.
Now, does that mean you have to put more money down on the house, or is it still
It
the
doesn't
required-
matter if it's-
the required deposit?
Right. It's part of your loan.
Okay.
It's financed in. And then you have your monthly mortgage amount, your monthly mortgage insurance. So you still get paying it as well within the mortgage. And the other thing that has changed in the last few years with them is the mortgage insurance does not drop off. In the past, it would drop off in a little less than 10 years. Now it's for the life of the loan.
I see.
So, it's great when we have to and we have no other option. But, and look, there's pros and cons to everything. So yes, they're not that they're bad loans. It's just they've become more costly to the clients. Now that we have so many other options, I'd like to try those first. And then if we don't, then we'll do those. But FHA is great. You do not have to be a first-time home buyer, so that doesn't matter on it. There are restrictions. A lot of the old-school realtors don't know that, in the past, yes, FHA used to send out their own home inspectors and make these long laundry lists of things that the home, the home seller had to do to the house to make it FHA eligible. But that has been long gone. Yes, there are little quirks, things like the house can't have peeling paint. If you have high steps coming in or out of the house, or even in the house with no railings, yes, you have to have railings on it. But other than that, there's really nothing else as far as that wouldn't. If your house, if it's dilapidated, you're not going to get a regular loan anyways.
So there's certain code issues that have to be met with this the designated FHA appraiser.
It's not so much an FHA appraiser. The appraisers, we have our own appraisal group, meaning we have appraisers from all over that work with us. Yes, they have to be licensed to do an FHA appraisal, but literally in years gone by, way before I even started, FHA would send their own home inspector.
Oh, okay.
You'd have your appraisal, and then they would send their inspector. That's not the case anymore.
I see.
And so that's, again, most realtors who have been in this for a long time still hear FHA and they think of a nightmare because there'd be these long laundry lists that their sellers had to do to make the house compliant. That's not the case. There's, just like I said, peeling paint, broken window, things to that nature, and the railings.
So what if a scenario exists where the buyer had to go FHA? You've run them through the gambit, and the buyer had to go. They can, in their negotiating for the house, they can ask the seller to take care of some items, and of course the seller may or may not agree, but it could be something that the seller can take care of, so it doesn't completely eliminate the property. If it's a situation where, for example, my parents live next door and the house next door to them is for sale, and I really want that house, but it's got some problems. You can kind of work around that through, I guess, some creative negotiating. With the down payment for FHA is
3.5.
It's 3.5% of the
required
purchase price,
and it can be gifted by parents, blood relatives. So it can't be, someone that's not a blood relative.
I see.
So it can be gifted. There's also down payment assistant, programs too, where you can get. This is Rhode Island Housing, and also I know Woonsocket has their own grant program as well that we could do with it, where you do get the down payment. The grant program is just that; it's a grant, so you don't pay it back. And the Rhode Island Housing one you could take as a second loan. And there are programs for certain areas where you don't have to pay that back either. But it goes by certain areas and the type of loans. So there are ways of getting the down payment for you. But the one thing I do always caution everyone with, like the USDA, which I'm sure we'll get to, which is zero down. People confuse that. So whether you're getting them gifted or not, whether you're whoever, mom, dad, or whoever's giving you the down payment, the zero down only means that that particular loan product does not require a down payment.
I see.
But there are still many costs associated with purchasing a house that have nothing to do with your loan,
Right.
per se. And this is the thing I explain to everyone. So just like with the FHA, when I'm getting the grant, well, you still need money. So, you being a realtor, when clients want to make an offer on the house, their seller's not going to accept their offer based on their handshake and a smile and a signature. They want I usually call good faith deposit. And that can be any denomination. Again, as the lender, we don't care if you don't put anything down on the offer, but it solidifies that your offer, you're serious about it, and they, don't want to start packing up their house just based on, the word they have something. So it could be 500, 1,000, whatever it is, that's the realtors. So you need that money. Then we do not require a home inspection, but highly, highly recommend it. And people do get the home inspection and appraisals confused sometimes. The home inspection is the person, you're hiring them to go to that house with you, not your whole family, and your realtor. And you're paying this person to tear the house apart and tell you every little thing that's wrong with it and the major things that are wrong with it. So if they're going to, tell everyone, don't get nervous. Yes, they're going to point out everything, but that's what you're paying them for. A good home inspector will let you know that's normal, this is normal, but he'll point out or she'll point out the big things that could be structurally or mechanically wrong with the house that you and your realtor want to sit down and write up an inspection request to go over to the seller's side. That's a home inspection. Again, don't require it, but highly recommend it. No, I don't know the cost of that. That's something you can ask your realtor would know, because I have no idea. But then there's your appraisal inspection. Yes, we collect that at the time of your loan application, because as I previously mentioned, the appraisers work with us, not for us. And quite frankly, they don't care if you close your loan or not. They're going out, giving service, and they want to get paid. So the appraisal is, you do not go to the appraisal inspection. They set that up. We set that up and order the appraisal. And the appraiser contacts the listing agent, and they go out to the house. They're not there like the home inspector. They're like in and out of there. You're taking pictures of things that they have to.
They're only interested in the value.
Exactly, but there are certain requirements that have to be in the appraisal, like all the bedrooms, the bathrooms, the electrical system, the heating system, outside photo, street photo. But the majority of their work, like you said, is the comp, is the market value. So a lot of their work's at town hall, registry deeds, looking things up, because what they're looking for is to tell you, the buyer, and us as your lender, that the house is worth what they're selling it for.
That's a great point, because everyone thinks they might overpay for. I've always said the person who's at the most risk in a real estate transaction is the person who pays cash, because they don't have a backup team like the bank or the lender, because that appraisal that you order is basically protection for your company to make sure that the value is there, and it also protects the buyer, because now the buyer knows that, hey, look, I'm paying market value for the property. I didn't overpay. And hopefully the appraisal comes in higher than what you paid. But they have accessibility to that appraisal, don't they?
Oh yes, and by law we have to give it to them within 3 days of closing. However, the second I get it, I send it over to my buyers with the invoice showing what the actual cost was. And the reason why I mentioned that is we collect the $450 on a single family, or if it's a conventional. With the loan application, I think it's $495 for government loans. And the reason being why we collect those set amounts is each appraiser charges differently, and they all have a different fee. However, we collect what we know is the highest of all the appraisers that work with us, because we can't go back and say, oh, they charged us more, we need to charge another $50. We can't do that. It's illegal now.
It's a flat. Okay.
Right. But we can reimburse you at closing for overpayment. So if when the appraisal report comes in, I send it over with the invoice. So if you paid $450 and your particular appraiser charges $395, you'll see in the final closing on the final closing disclosure that you paid $450 and the inspection fee was $395. So you get the credit back for overpayment.
Nice.
So that's how those work. But yes, you get it. I send it to you right away, but you, by law, have to get a copy of it within 3 days of closing.
And that's a safety net for any potential buyer, because if you're buying cash and you don't have anyone looking out for the value, you may in fact pay more than what the market value of the property is. You mentioned something a couple of minutes ago about a USDA loan. What's a USDA loan? Because I know around there's certain areas in northern Rhode Island that qualify for these, correct?
Basically all but Woonsocket, sorry. Okay. And as I mentioned, the USDA, no, it's USDA rural loan. And the ironic thing is, like I said, they do not lend on farmland. It's based on the Census Bureau, how many people are in the area, and the medium income level on it. So Woonsocket's not, because it's a city. There, I think, maybe blocks total, off of, by the Beef Barn area up that way.
On the North Smithfield line.
Exactly. And they're literally address specific just for that reason, because of those, you could have a house on one end of the street be eligible and a house on another not. And that's very typical of Cumberland. And I've always tried to figure out, is it north of 295 or south? But then again, I don't know if I'm going east, west, or south. So
there's a database that you go to. You
Absolutely.
Actually plug in the address. If somebody comes to you and says, Bethany, we have this house on ABC Street, you get the address off of them, and you can figure out if that's an additional option for them.
Or ones that we know they're going to want to do. Okay. So this is where I always caution my realtors and my buyers. Before you go to the house, if you can't look it up, have me do it, because that will end up being the house you love, and it will be the one that's not eligible.
Yeah, good point.
So, so all of northern. There's many parts in Rhode Island, in Massachusetts that are, but basically northern Rhode Island, it's everywhere, but Lincoln. Lincoln is not either, because the medium income level is higher, and also the Census Bureau, a lot of people, again, majority, if not all of Woonsocket, because it's a city, and then half of Cumberland. But North Smithfield, Situate, Burrillville,
Gloucester,
all of those they are. And the great thing about those are it's again zero down requirement.
Wow.
Means that loan does not require a borrower to put down any down payment.
Oh, that's fantastic.
Like FHA, that's 3.5%.
Correct.
And so that's fantastic. Now, again, all these loans that, speaking of FHA, USDA, VA, those are, again, government-backed loans. So it's HUD, the HUD guidelines is what we have to go by. But they do not lend the money. And a lot of people are confused about that. But they do not lend the money. So USDA is a great option. It gets you into a house, beautiful, any house really, other than, like I said, 5 families.
So you go in, you negotiate your best deal with your realtor.
Yeah.
Whatever as long as it qualifies for the area.
And you qualify for the income.
And you qualify for them, which you'll do in advance, right? If they call you, the buyer can call you in advance, and you can tell them exactly what they would qualify for based
Right.
upon a certain house, because obviously taxes are different in
Well,
every
not
town.
just that. With the USDA, there's, again, catch to everything. There is no limit to the purchase price,
Oh,
where FHA and VA have loan limits for all areas in the country. USDA, there is no loan limit. However, there's an income limit. So you cannot exceed the medium income level for that area.
okay. So every town has a specific median
Town, county.
or county, okay, based
Right.
on the census, I'm assuming.
So,
or-
for example, one person in northern Rhode Island, if it's a one or two person household, two incomes, they cannot exceed 94,600. I think it is 94,600 a year, and
Okay.
it's definitely 94,000, but not positive on the hundreds part.
I see.
But your total median income, and that, a lot of people go, well, I'm only going to be on my loan anyways. My wife, fiance, or boyfriend isn't going to be on the loan. However, it is not just who's on the loan; it's all income-bearing people that are in the household. You have to disclose.
Oh,
So,
okay.
because a lot of times I'll have a significant other that, for one reason or another, isn't on the loan, but that income still has to be be
I see.
disclosed.
Now, can you get the seller to, like, if let's say you have someone that doesn't have a heck of a lot of money,
Mm-hmm.
and they're working paycheck to paycheck, but they really want a house, they're paying high rent,
Right.
which of course
Some are mortgages now.
right, benefits the landlord, and we're going to have another, obviously another show on investment property and how it works. But so they want a home, they call you, you qualify them, and then they're looking at a specific area, and then basically it's no money down. Can the seller, there's usually closing costs associated with a loan, right?
Right.
Can the seller contribute towards the buyer's closing costs?
Absolutely. So the first thing about those two little words, closing costs, is that closing costs is a blanket, words. It's closing costs, your prepaids and reserves. And prepaids are your homeowner's insurance, the days of interest, from the date that you close on to the first of the month. If there's taxes due, those are prepaids. And we can get into escrows and everything after. But to answer your question, we'll just do closing costs. So the great thing that can be used is called a seller's concession, or closing cost credit from the seller. And what that is when you make your offer, you want to make it, you need help and to offset the closing costs, that you can make it with a certain amount of money. Now, it can't exceed, excuse me, on conventional loans, it cannot exceed over 3% of the purchase price.
Okay.
And on the HUD-backed loans, USDA, FHA, and VA, it can't exceed 6%.
I see.
But if anybody ever needs 6%,
Right.
it's
So
like,
3%. I mean, that's substantial.
And
So if they're
absolutely.
buying a $200,000 house, let's say, that's $6,000. That goes a
Right.
long way, I would think, right?
right. So I always try to, unless it's in an area where the taxes are high or whatever, I always, say to everyone to not scare the seller too much. Use 5,000 as a blanket number.
As a baseline.
Right,
Yeah.
right. And very, very cautious also for people to know that that doesn't necessarily mean it's going to cover everything. I always say to help offset.
Okay.
Because there are certain things we don't know about until right before closing, or during the closing process. So, your homeowner's insurance, once you get your quote and you solidify your, insurance, but when I'm disclosing a loan application, I'm just estimating that. So, that can change your closing costs because the first year has to be paid for in full
I
at
see.
closing, or at closing. So the closing costs, you can never say it's going to cover them all. The seller might have half a tank of oil and they want their oil back, paid back for their oil.
Right.
Those are numbers that the closing attorney gets from the seller's side, and those are done obviously you want it done as close to closing as possible. You don't want to be paying for their oil in the
So
winter.
sometimes you will need money. I mean, it's like my father used to say, there's no
Absolutely.
such thing as an absolutely free lunch.
Absolutely.
Okay.
So what happens is with that, using the $5,000 as an example, the one thing I always cautious my clients is, again, you're hiring the professional, let them advise you and listen to them. So don't insist on going in lower than what your realtor is advising. And on top of it, ask for seller's credit, because you'll probably insult them and they won't answer you. Because what people don't realize is the seller's credit affects the seller's net amount that they walk away with.
Makes sense.
So using a $200,000 purchase price and you did get a $5,000 seller's credit, the seller's really agreeing to net $195.
Right.
Because at the closing, they're going to be on paper moving $5,000 of their proceeds from the sale of the house over to your side to offset, or hopefully cover, but offset your closing costs, prepaids, and reserves. Yes, you're purchasing it for $200,000, because some people will turn around and say, well, technically I'm financing it. Well, if you want to look at it that way, that's fine, but $5,000 doesn't do anything to your mortgage payment.
Right. And plus, if it's $5,000 you don't have to begin with,
Right.
it's still...
Or you do, but you want to hold on to, because, like I said, you're buying a house. You need money to make it a home. You need to get acclimated to all the costs associated with owning a home.
Yep.
But everybody uses it. It's not just somebody who's just starting out. I mean, there's people who buy very expensive homes that even ask for them. So it's not anything that you feel like you're asking for a charity, so to
Right,
speak.
right.
It's very, very common. But you have to be realistic and understand, one, you don't want to, insult the seller.
Right.
So you need to be realistic with knowing that it affects their amount. Now, we've seen it where people have gone higher.
No.
Okay, well, the house is listed for $200,000. If your realtor says this house will have no problem appraising out, let's give them full asking. We'll put an offer in for $205,000,
I see.
and they accept it. Then they're really walking away with the $200,000.
So
they
the
asked
seller
for.
gets there perfectly happy. They're getting full price.
Right.
The buyer's perfectly happy because they're getting a no money down.
Right.
And it's funny you mentioned about how that doesn't change the mortgage a whole heck of a lot. I remember back in the '80s when we had to memorize the mortgage tables. And I always remember at a 30-year mortgage, to borrow $1,000 at 5% was $5. So that's at 5%. The rates right now are probably...
Well, here's a general rule of thumb that it's amazing how it actually works out, Paul. It's $20,000 per every $20,000. Your principal and interest portion of your loan will change by $100,
Okay.
and it's really right on the money. So if you're thinking, okay, I'm going to put $20,000 down, and it's your payment is no, I want to get it lower. How much do I have to put down to get it? $200 lower. Well, you're putting down now $40,000 more,
That
right?
makes sense. It makes perfect sense.
Yep. So it's a general rule of thumb, but that's the way that it works out. So $5,000 doesn't do
That
much.
just doesn't even put a dent in
No.
it. Yeah, and the funny thing is, like when we used to sell, I say sell because, technically real estate brokers and agents are salespeople. I mean,
Right.
we can call ourselves whatever we want, but the bottom line is we're salespeople representing clients.
Mm-hmm.
I remember years ago a big portion of selling a house to someone was not only the benefits of the house, but it was also the tax benefits of having that write-off,
Right.
with the federal
Yeah.
government every year that you didn't have while you were renting.
Right.
And I would actually draw out an annuity chart showing the principal balance going down
Right.
as the years go by. And technically, that's an annuity because at some point, the annuity is going to be all in your house if you're going to go from all loan to no loan over a period of years. And I don't know if anyone does that anymore, but I'll tell you, it makes the difference of about 25% of the payment, or at least it used to historically. If it was $1,000 a month mortgage payment, well, after taxes and all of these adjustments and things, it was like around $800. The real number was $800, which makes a substantial difference. Well, while I got you, why don't you give the audience your phone number again, contact information. We're talking to Bethany Levin from Northpoint Mortgage, and she'd be more than happy to help you out in your venture, in your quest for a house, and of course a variety of mortgage programs available that she has that she can custom tailor to the particular buyer.
Right. So once again, it could be reached at 401-465-9003. And my website is www.bethanyloans.com, where all my information's on that as well. And my email, which is long, is blevin@trynorthpoint.com. But again, phone number 401-465-9003.
That's great. Thank you. And of course, we encourage call-ins. I know we only have about 7 minutes left here, but we always encourage call-ins. So if anyone would like to call in and speak to either myself or Bethany, the number here is 401-766-1240, and we're always available to take your call. You can be anonymous. You can call in and say, I have a friend who has a friend who has a friend who has a situation. You can change your name for the radio, and we'll be more than happy to walk you through the issue. Bethany, the big thing now is and I know you know this, but what can sellers do to make their houses more attractive or qualify for these programs more? So like you mentioned earlier, chipping paint and things like that. Right. Are there any other things that a seller can do to help the buyer's process along?
Right. So with Rhode Island, because Massachusetts, because I'm also licensed in Massachusetts protects the buyer, with if they have a septic tank, meaning the house has to pass with what's called a Title V. Rhode Island does not have that. And more often than not, we have these sellers who, know that their septic is on its last leg, so to speak, right. And they don't repair it before they're selling. And then they don't want to negotiate. Well, the problem is, if you are doing any of the government insured loans, again, FHA, USDA, and VA, you have to have a septic inspection, okay? And if it fails, you're not getting a loan until it's fixed before closing. The seller has to fix it before closing.
Because that's the new Rhode Island law, right, too?
Well, no, that has always been. That's if they have the cesspool. They won't do it with the cesspool.
Oh, okay. You're saying with septics as well.
This is with septic.
Okay.
With septic, it has to be in working order, because they will not lend on the house if it's not mechanically and structurally sound, because they don't want the buyer having any burdens once they get in, and then all of a sudden the septic system fails. Now they got to find the funds to fix that, and they can't pay their mortgage. So again, all these guidelines aren't just, some of them, yes, are crazy, but aren't just for no reason. It's about risk. It's the risk to the lenders. It's protecting the buyers. So if a seller knows that they do have something that's going to come up in the inspection, and even if you list your home as is, if it's something that's a serious issue, unless you have a cash buyer, just fix it. Because in the end, you're either going to have to pay for it, or the problem is going to come up with, if it's not one buyer, it will be the next and the next and the next.
Just a recurring cycle of letdowns for all parties concerned.
Yep.
Right.
So that's one of the biggest things on that. And with that being said as well, just they have to understand, the realtor, again, with the seller's credit, going back to that, hopefully their listing agent understands that how to explain it, and look, you're still getting the same amount of money, right? You're not giving anything away for free. And just making sure that everything is sound in the house. I'm not saying go out and put a ton of money in it, but anything that's going to be an issue with every buyer, why not just get it
And
fixed
it's going to make the
taken care of?
property more marketable, I would think, and they're
Absolutely.
going to get it in the asking price anyway.
Right.
The funny thing is a lot of people don't know this in Rhode Island under the seller's disclosure law. If you sell a house or agree to sell a house to someone and you enter into a contract, the buyer has to sign the seller's disclosure, which the seller affirms certain things
Right.
about the house. And if a buyer pays for a home inspection and if they find out the septic system was bad and the buyer walks from the property, the seller is supposed to amend that seller's disclosure. And I find very rarely that they do. They just kind of
Right.
let that buyer walk, and they think
Yep.
they're going to get someone else who's not
Right.
going to have another septic inspection, or the monster in the closet is still going to
Right.
stay in the closet. And they don't realize, a good agent will explain to the seller that, we now have to modify that seller's disclosure so any future potential buyers would know about the issue. And it saves so much time and aggravation and heartache and, money. Buyers are shelling out money for these inspections. The sellers are taking their house off the market, and that's time, time wasted that they
Right.
could have their funds sooner. So that's great
And
advice.
it's not just the government, like the conventional loans, you don't have to have an inspection, but
Yeah, who wouldn't?
everybody does.
They should.
So
They should.
it's going to come up on it. And this is with everything. If you know you have termites, get it fixed.
Absolutely.
Repair the wood. It's everything. Radon. Anything that is going to be a deal killer is really, just get it done beforehand. Even if you put sold as is,
Exactly.
doesn't matter if it's as is unless it's a cash buyer.
Right. And, I find the as is, for when I'm representing a buyer, when I see as is, that's a red
like,
flag for me now,
exactly.
because I have to get out a microscope and look at that house very, very closely
Right.
to see, exactly
Exactly
what's
what's
going
wrong.
on. So that buyer may be a little naive and not have the experience that I have, but you really have to now
Right.
take out your
It's
magnifying glass and look
absolutely
at
it's
everything.
either that or you're going for a rehab loan, and those are costly and long time. Where we can close your loan, pretty much almost 30 days or less. A rehab loan could be months.
Wow. Well, thank Bethany. This has been wonderful information. I really appreciate you coming in, because what you do ties into so much of what I do, and just the programs alone, like the No Money Down program, I think is so important, because it just seems that we live in a world today where people don't have the accessibility to funds like they used to. Mom and dad were able to save the 20% down and then march into the bank, but it just seems like you don't have that
No.
opportunity anymore, because life has changed
Exactly.
a little bit.
Exactly.
At the end of the week, there's only so much money to go around, and why should you not buy a house
Right.
if you can, and have the tax write-offs and the benefits and so on and so forth. So, having said that, I am, let's see.
WOON, Woonsocket Radio, ON, AM, and FM.
Topics that we'll be covering over the next few weeks, and it's basically how to choose a real estate agent. We've talked about mortgage brokering, and you'll know to call Bethany. She's been on her time right now, giving us some valuable information. Flipping real estate, it's a class I teach because I own a school. And I teach to real estate agents for their continuing education credits. And that seems to be a very popular subject, particularly with all of the TV shows that are on now, HGTV and Bravo, Flip and Flop, and everything else. So that usually spurs a lot of conversation. So we'll have some people in to talk about that. And, of course, we're going to have a couple of home inspectors in to tell us in the future what we're looking for, what they look for, to educate you, the buying public, as to what you should look for in your next home purchase. Let's see. Having said that, it's time to go, so I thank you. My name is, again, Paul Vanas. My number is 401-265-6144, and hopefully I'll see you next Friday afternoon.